We do have a very special guest standing by. That is Ngai, the chairman of McKinsey China. Very, very good morning to you, and it's lovely to be speaking with you here in Tianjin.
Good morning, Sam.
And what's your sense of the mood here? You know, Li Qiang's speech, as I said, very much sentiment buoyed by the confidence we heard from the Premier. Do you think it went far enough to convince the foreign business community?
Sam, I think it really depends on whether you're a glass half full person or a glass half empty person, right? I think on the glass half empty side, I'll go there first. I think you look at all the challenges that China has, right, in terms of right now, there's a bit of overcapacity, right? A lot of the export sectors are quite hit by, a slowing world economy. I think you look at the capacity of, residential, real estate and others. The margin compression right now is really being felt by all businesses, right? So I think if you take all these problems that China has and put it all in the short term and feel like, hey, when's that going to be resolved? I think you can actually have a quite pessimistic view. And I think that's a little bit of what a lot of businesses expecting coming out of COVID. The big rebound is not happening, right? So that's a kind of glass half empty view. On the other hand, 18% of global GDP today in China, growing at 5% this year. It's a third of global growth, right? I think from that perspective, there's no other economy of this size that's growing at this pace. So on that side, many of the macro factors that we love about China is still very much present. So if you look at that perspective, I do think that China still represents probably one of the most unique markets for anyone operating in the global economy today.
It's very important to put it into context, particularly when you look at the contribution to global growth, as you have pointed out there. But when you lift up the hood and you take a look at where those growth drivers are actually coming from, what are you seeing? Because Goldman Sachs, of course, saying that China perhaps doesn't want to rely on the old playbook of the property sector anymore. We're seeing the stimulus coming through, but investors seem to be disappointed with the lack of specifics around that.
Yeah, look, I think that we need the consumption in China to come back up, right? In the last few years, Chinese savers have saved up 33 trillion of RMB, right, in deposit savings, more than ever before, right? If you look at a lot of the banks today, you see that, residents of China are actually repaying their mortgages, right? So the deleveraging on the consumption side is actually happening. What we need there is a little bit of a confidence, right, where people are willing to spend again, where they feel like, there is going to be a little bit more optimism, right, in the market. And I do think that, I hope the consumption will come back more. The other one I think is very interesting is that China is still very much at this stage of innovation and technology, driven economy. So if I look at, electric vehicles, if I look at, solar and other sustainability, right, if I look at even recently, a lot of Chinese exports, right, going actually outside in terms of technology. I mean, the interesting thing is that in the past few months, the top 3 apps in the US downloaded are all Chinese, right? So I think that there is quite a lot going on in there, and I think that is really being discounted by the market right now.
Let's talk about AI, because I mentioned those restrictions coming from the US, but the view here in China is that the more pressure we see coming from the Americans, the more it's going to strengthen the resolve here to really support the domestic industry. So no doubt artificial intelligence, technology broadly speaking, is going to require sizable investments. So where are the business opportunities here? How big are they?
Look, I think, every Chinese company, today is looking at AI, looking at tech. I mean, look, China is probably one of the most digital economies in the world today, right? If I look at all my clients, I think that they are all really looking at, innovation and digital technology as the way out, right, of what they have today. The R&D is massive, right? I look at some of these electric vehicle companies in China, right? And if you look at kind of how much they're putting into R&D, right? I think that it's a multiple of how global companies are putting into it, right? So I do think that if I look at, more like the next 3 to 5 years, right, than in the next 6 months, right? I do think a lot of this will pay off. So look, I'm still very positive about this, right? I think that, people do think that, in a sort of shrinking workforce in China, I think AI, technology, innovation will pick up the pace to increase productivity so that, the inverted pyramid, right, of less workers in China will be overcome by, increasing productivity, right, from these workers.
And you mentioned global companies. How are multinationals reassessing the way they do business here? You believe that we could perhaps see the biggest reconfiguration, certainly in China, given the geopolitical backdrop and other things going on with China's economy. I mean, particularly in light of some of the stories we've heard lately about certain companies being raided by police. Look, there is an argument that, hey, you're in our country, you need to behave. But how are you seeing how companies are looking at doing business here?
No doubt in the last few years of COVID and everything else, every single multinational company is looking at China and saying that after a decade or two of breakneck growth, right, what does the next decade hold for us? And I've been involved in many of these discussions, right? I do think that you have a very widening spectrum of multinational companies. In fact, we looked at the top performing multinationals. They have been growing at 20%, right, in the past 10 years. And in the last few years, that growth has actually increased. But there's also a big portion of multinational companies that are struggling in China. And when I go into these companies, what is the problem? It's competition. In the last decade, right, the Chinese local competition has actually increased massively, right? I look at this market as perhaps the most intensive competitive market there is anywhere, right? So if I look at the multinationals who are struggling in China, I think it's mostly competition more than politics, right? That is actually prohibiting the growth and compressing the margins. And like any other Chinese companies today, right, the sentiment is being felt the same, right? There's oversupply, compressing margins, and how do we think about the pockets of growth within China that I can target and make some more money? And I think that that's really where the overwhelming sentiment is. Some companies will come and say that I'm doubling down. That's probably, I would say 10%, 20% of the companies. They are by far the majority are going to say, well, I'm here to stay, right? Let me rebase my expectations, right? Let me rethink a little bit around my strategy, right? Let's go after pockets that I can win, and perhaps there's a portion of the market that I will never be able to play in. I think that's a realization that's coming after the last 20 years.
And you speak about competition. I'm curious how you're looking at this issue that we've been watching quite closely, and that is record youth unemployment in China. Now, I know this is something that other countries are dealing with, but with a population of 1.4 billion, and you've got President Xi Jinping talking about eating bitterness and heading out to the countryside to work. How are you watching this, particularly when you've got this sort of evolution of robotics, etc., kids needing to upskill? You've got 10 million kids being pumped out of the universities each year. How concerned actually should we be about this?
Look, I think this year has been a really bad year for recruiting, right, for university graduates. But I would say the same in the US as well. I would say the same everywhere around the world. This year has been a tough year. I look at the graduates and I look at, 20%, to this year. And I look at them and I'm like, wow, this year is a tough year. But at the same time, if I look at over the past 10, 20 years, we've seen this, right? There has been boom and bust times and we have seen difficult years. I actually think for the graduates, if they can get through the next 2 years, they will develop more resilience. They actually would develop a little bit more, toughened up a little bit, right? In the past 20 years, there's never been a period where graduates have had it so tough, right, in China. And I think that there is a little bit of I was on the young person the other day, right? And they're like, oh, all my classmates here are maybe driving DDs, or they are, trying to figure out what they want to do. Some are going back to school, some are lying flat. Look, I think that is the generation that will have to go through volatility. The generation will have to develop more resilience. The generation just would need to, maybe accept the reality that, look, it will not always, right, be the, 8 to 10% economic growth that we've seen in the past. And hey, welcome to the real world, right? That is, where a more mature economy that is going into more moderate growth will go through these cycles. And am I concerned? Yes, but it won't always be like that. We're going through a period where perhaps there were, too high expectations. We're rebasing that growth right now. So let's see.
Yeah, and I suppose if you're lying flat and you've got a whole bunch of people doing that, it doesn't really solve their demographic problems either, Joe.
Yeah. But at the same time, if I look at all the growth pockets, right, I think you can be very positive about all these things, right, that will continue to fuel the Chinese economy. And I think on that side, look, there's no other market that will have this kind of size of growth.
Yeah, it's definitely something to watch. Thank you so much for your insights today.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.